You got about 100 S&P names on the tape so far for the quarter. And in tech, at least, if you strip out Netflix, I mean, what has there been to complain about, really?
There really hasn't so far. The numbers, particularly if you're focused on companies with long duration competitive advantage, and, I would highlight over the last couple of weeks, we've seen Microsoft, for example, put up exceptional numbers as the cloud transition continues and Azure continues to ramp. And, it's just amazing if we think about the numbers there. Their commercial cloud business, which is effectively the size of Amazon Web Services, it's a different composition mix of business, but both of those businesses are growing 40% at $40 billion annualized. It's pretty remarkable numbers. So those it's a great area to continue to be in. Microsoft still trades at an elevated but reasonable valuation. ASML put up great numbers, and obviously another very competitively advantaged company with a monopoly position in what's called EUV, which is semiconductor capital equipment company, where its technology will be inserted for many, many years to continue to propagate Moore's Law. And then, we expect, the digital ad ecosystem, particularly around social, the Facebook numbers and, the ad numbers from Amazon should, hopefully continue to show a progression there. Google, a little more muted. And then, this continuing narrative out of the semiconductor companies, like we heard out of TSMC, where, things aren't getting worse. Things have been adjusted a little bit for supply chains and for Huawei. But things look to be getting a little bit better from here.
Okay, now let's bring in Synovus Trust Portfolio Manager Dan Morgan, also with us. Dan, that was a setup to what I consider to be a deeper question for investors here. We're in such an unusual period. Take Microsoft, for example. When you get these big cloud and 5G transitions, often the big stocks don't make a really big move. Microsoft has managed to do that. So if you're an investor, how do you find the next Microsoft, maybe a big stock that's got a lot of potential still?
Well, John, just kind of taking from the earlier discussion, I mean, I would expect those Microsoft numbers to roll into the Amazon report that's going to be coming out on Friday. We know that the infrastructure as a service cloud space is very strong. I think we're looking for AWS at about $8.5 billion, about a 40% increase. We know that commercial cloud, intelligent cloud, and Azure were all very strong for Microsoft. So I would expect those good numbers for Microsoft to roll into another big cap tech name like Amazon, who will be reporting on Thursday. So looking for good things out of cloud and looking for a good migration from Microsoft's report over to Amazon coming later this week.
Denny, what do you make of the Realogy-Amazon partnership today? Do you think that this is Amazon making a play into real estate, or is this a way for them to get more of their devices into homes? In other words, should other realtors, the Zillows of the world, be worried about this move?
Yeah, it's too early to tell, but it could be either. Real estate's a huge category, and whether that's the ownership of real estate, the sale of real estate, or the rental of real estate. And if we think about Amazon, for example, and the point you just made, and we think about what some of the highest selling merchandise was on Prime Day, it was all around the connected home, right? Whether it's thermostats, doorbells, or Echo devices. And so thinking about that, there are a number of paths that Amazon could go down, but it just also continues to highlight the virtuous cycle that Amazon is in with its customers, and whether it's some sort of prime relationship that allows it to just sell a lot more to its customers and provide price convenience. That's really important, and there's a lot that Amazon can leverage from that. So we'll see where they go with it.
Dan, I'm curious about Alphabet and specifically YouTube, which has been an important growth area for them, but some choppiness lately. And I wonder if we could be putting the wrong focus on who's likely to get hit by Disney Plus's rollout. Could it be YouTube? Should investors be a little bit wary about that younger demographic that's all about YouTube now, but traditionally belonged to Disney and might be going back?
Yeah, it's interesting, John, to see what's going to happen with YouTube. I mean, are Google going to eventually try to compete in that space in terms of, being more focused on streaming? They've got YouTube Premium. Are they going to enter the the wars with Amazon and Fox and Disney and Netflix and so forth, and start getting more involved in having their own content and so forth. So it's kind of an interesting thing because, as you know, John, they don't break out the YouTube numbers. It's in that other revenue category with their GCP, which is their cloud unit. So it's kind of hard to figure out exactly what's going on with that unit, but it will be interesting. I think it does create an opportunity going forward for Google. As we know, their core ad business was only up 16% in the first quarter, and it seems like that's starting to mature. So it will be interesting to see if they can make bigger inroads in kind of with the Snap crowd, so to speak, in regards to streaming, and can they make YouTube and YouTube Premium actually work for them and become a huge profit center. So it'll be interesting to see what direction they take that.